Thousands of people are moving to Florida every day. As they do, the cost of securing a piece of land near major cities has skyrocketed, pricing the average buyer completely out of the market. To bypass those massive price tags, buyers are expanding their search. They're looking past the city limits and into emerging rural counties, where the price per acre drops significantly, allowing them to secure much larger parcels of vacant land. But that lower price tag comes with a steep trade-off. These rural parcels rarely offer a turnkey experience. Buyers step into a complex landscape of unpaved roads, missing utility lines, and surprisingly strict local regulations. To understand exactly what you are paying for, we have to look at this chart. This plots the cost of entry against the property's development readiness. Up here in the top right, you have turnkey metro land. It has roads, power, and water right at the lot line. It's ready to build on immediately, but it requires maximum upfront capital to acquire. Down in the bottom left is emerging county land. Your initial purchase price is very low, but the readiness is nearly zero. You are taking on the heavy lifting of developing the property yourself. If you buy a property solely because the purchase price is cheap, without verifying what it will take to make it usable, you can easily end up holding a piece of dirt you can't build on. At that point, you've acquired an annual tax liability, not an asset. Succeeding in the Florida land market requires a precise match. You have to align your available capital and your timeline with the land's current stage of development. Let's pull up the scorecard. The first factor in an emerging county is population and economic expansion. The required input here is timing. You must research local job growth and migration to purchase land before roads widen and retail centers are built. If you time it right, you secure larger tracts of land at a heavy discount, positioning yourself to capture the upside of property appreciation as the county matures. But this early entry strategy introduces a specific risk: capital illiquidity. You are locking your money up in raw dirt. You then have to passively wait years or even decades for businesses and new residents to arrive and build the local economy around your parcel. Buying early for appreciation means you are intentionally trading the immediate use of your cash today for a future value that no one can guarantee. That brings us to the next row on our chart: infrastructure and utilities. Specifically, we need to examine parcels that sit completely outside the current municipal grid. Purchasing land miles away from the nearest public water main or sewer line provides an immediate steep discount. Your budget secures considerably more acreage out here. The catch is to hidden costs. You must now pay out of pocket for alternative utility solutions. To make the property habitable, you have to fund the installation of a private well and a septic system. Your alternative is to delay your building plans and wait. You can hold the raw property until the county eventually pushes public infrastructure out to your specific property line. You have a clear choice: pay a premium upfront for a city lot that already has utilities, or buy raw land cheaply and accept the heavy, delayed costs of developing it yourself. The reality is, you always pay for infrastructure. It is either rolled into the high purchase price of metro land, or you pay for it out of pocket in rural counties. The third factor you must evaluate is zoning regulations and future land use plans. These rules strictly dictate what you can and cannot legally do with your property. This requires deep due diligence into local government plans. If your goal is farming, running a business, or establishing an off-grid homestead, you have to verify the county currently permits those specific activities. The trade-off is that rapidly growing counties constantly rewrite their rules. They update their development plans to accommodate population spikes, meaning you have to actively monitor local government meetings to see if your area is slated for changes. If you fail to monitor these shifts, a newly passed ordinance could heavily restrict your permitted use, effectively killing your project before you ever break ground. This constraint connects directly to our fourth factor: environmental and geographic realities. Many buyers purchase raw Florida land for immediate recreational utility. They use it as a base camp for hunting, fishing, and boating, actively enjoying the property while it appreciates. The environmental trade-off is that land rich in natural resources frequently falls under strict environmental protections and state-designated flood zones. A strict flood zone classification can severely limit where you can build or legally prevent you from pouring a foundation for a permanent structure entirely. Prioritizing dense natural geography often means permanently sacrificing the legal right to develop a traditional residential home on that site. Navigating these zoning and environmental rules requires you to act as a proactive project manager rather than a passive consumer. To process all these variables, we use a decision tree to map these 4 factors directly to your specific goals. You have to decide if you are aiming for an immediate build, a long-term investment, or recreational use. First is the future builder. Your goal is to construct a home in 1 to 3 years. Prioritize counties with active road expansions. Avoid deep rural lots entirely, unless you possess the cash reserves required to immediately install alternative utilities yourself. Next is the budget-conscious investor. You are seeking pure financial return over a long timeline. You should prioritize areas showing steep population growth trends. Buy scarce, large parcels before the utilities arrive, and avoid paying the premium attached to current infrastructure. Finally, there is the recreational optimizer, prioritizing immediate outdoor lifestyle use above all else. You must prioritize flexible local zoning. More importantly, avoid buying land sitting directly in the path of heavy master-planned residential growth, ensuring your remote retreat actually stays remote. Ultimately, there is no universally smart piece of land. A great purchase for an investor might be a disaster for a builder. It depends entirely on which of those 3 profiles you fit. Many emerging Florida counties provide a massive upside in affordability and space, but they do not offer turnkey convenience. Successfully purchasing land in these growing areas requires you to take on the responsibility of an active researcher. You have to deeply vet the utilities, track the growth, and verify the zoning laws long before you sign the deed.